Hi there, welcome to Wyckoff Technical Analysis session for Cardano. And we all know what had happened a week ago roughly. And basically Cardano is still trying to recover from the aftermath of the incident. So let's quickly take a look at both the weekly and daily charts and see what's happening to Cardano and where is it heading. If you're new to my sessions, these are the free takeaways you'll get from these live sessions. Basically, the current and potential future Wyckoff stages, key price levels where resistance or supports are, and also any breakout timing if the chart patterns are showing us those time frames. So here, um, we're looking at this current point that's coming down. The dual resistance I mentioned in the title is this over here. Basically the red key level of around 73 cents, as well as the bottom edge of this downward channel box. So previously we talked about there's a chance for Cardano, like higher chance for Cardano to come down to show us a sign of weakness. So there are three references. One at this level, that's pretty much where we are now, and then two other lower levels. So these three happened at different time. The first one happened back in February this year, the second one March, and subsequently June. And now we are back to a similar level. So if this week's candlesticks close anywhere from the current point to somewhere near the white line, either above or below, this sign of weakness will be confirmed. So the white line is the top or the ceiling of the long-term playground zone. So basically, since 2018, or even, well, let's count as 2018, 17 is very short, most of the time Cardano was trading within this box. So that's where this box is, what this box is about basically. And currently for Wyckoff, if the sign of weakness, after it's confirmed, a lot of times we may see a rebound. However, the rebound may not be strong, especially given the current backdrop. So the potential next phase would be a rebound like a lower level LPSY, and then eventually further down maybe towards an accumulation cycle. So maybe further down the timeline, that's the next two events in the weekly time frame. So we can take reference from what happened over here. So back in 2022, during the downward leg of the distribution cycle, we've got a couple of LPSYs, and then eventually there was a low point sign of weakness. There was one over there at similar level, while the distribution cycle was still at mid-late stage before the upthrust of the distribution back in August 2021. This time we did not have any upthrust or upthrust of the distribution. This lick over there was supposed to be an uptrend heading towards that direction, but during the period since September, a new downtrend has been established, and then the dip we had last week basically kind of destroyed the hope that in short term this can be realized. So basically this, I would say, becomes 3017 now. And while we're talking about this, that these two stages are the ones that follow this. So logically these two will take the 70% chance as well, but this may not happen. So there are two ways that this can get into an accumulation cycle. One, there is a little bit of rebound and got rejection and eventually heads to the accumulation, or there's no rebound at all. The price got rejected from the bottom edge of that blue downward channel box and then goes straight to the accumulation. So that's two bearish scenario. Bullish is the one where we talked about near the end of December or somewhere before Christmas. There is a time point over here. When we get to the daily chart, the date will be clearer. So we'll talk about that breakout time point. Um, let's switch on the Bollinger Band squeeze. So whenever there is a squeeze, there would be bigger price swings following. So currently we are within the squeeze, and technically speaking, this period where there's no shades at the back, I would consider it still a squeeze period. So these, we can look at it as combined since June till now. This narrow range is getting us into a period where we may see bigger price swings. So this was what happened back in August all the way till October last year, and then subsequently when the squeeze pressure got released, we've got these bigger waves of swings, and then we got into this narrower or like decreased magnitude of swing. You see, if I compress this and turn it to a line chart, you see these bigger waves and then turning into smaller ones. So much like what we had here as well. So currently we are still in a squeeze, meaning there is a likelihood that we may get into bigger swings in maybe a near term. So this time frame may be, or this time point over here may be the trigger point. Let's get into the daily chart and take a look. While the price seems like still going to be bouncing between or within this triangle. So that's the resistance. The first resistance, that's the second resistance, the red key level of 73 cents. This obviously is now the support. First support at around 63 cents. And after that would be somewhere near these two sign of weakness, around 55 cents. So let's get to the daily chart now and see what date are we looking at for that breakout. So we have previously drawn this. Let's remove this now because the price is continuing to move within this triangle as we talked about in previous sessions. It tried to go up both on Monday and Tuesday, but then got rejected by this dual resistance, the bottom edge of the downward channel, as well as this red key resistance at around 73 cents. So these lines I have drawn for many sessions now, so it's not that I adjusted the lines that they are at there. You see the price really react at that level for 2 days. One, it climbed and stopped right around that level. Yesterday it dropped from that level. The sign of weakness definitely has been confirmed. It's at a very low point that I would say potentially for the daily chart, this is not even a sign of weakness. This is potentially a preliminary support stage that we may be or may have entered and exited the distribution but entered the accumulation cycle. So this pop over here may be part of the preliminary support. So you see what happened over here. So there was big drop back in February, same year, just this year, and then this was supposed to be another big drop. You see the wick went all the way to, wow, that's very deep into the white box, went to 5 cents roughly, and then got pushed back up. People buying the deep. Looks similar, right? We went very deep on Friday and then got pushed back to a level not as high as February, but still this long wick looked very similar to the one on February 3rd. And then eventually the price continues to decline with a little bit of bounce, much like what we're having. We've got a bit of bounce over here. That was the selling climax. So are these two, say, would this be the selling climax and this one the automatic rally? There's a chance that they are, but we need more time to find out, because currently there are two possibilities. One, this is what, like I said, the accumulation. The other is that this may just be another LPSY before it eventually really comes back to the selling climax. So that's why I say this may be the process within the preliminary support instead of the selling climax being here. But there's still a chance, so I'm keeping all these tags over here, because when this price eventually, if it breaks below this white line, then that may be where the real selling climax is. Because if we look back just early this year, we've got one selling climax back in June that was around 54 cents, and then the other selling climax was back in February, somewhere around 66 cents. So those two, the current point we are at, or where the price got support and rebounded, was similar to what we had back in February. But if it really comes down, there's no reason why it can't retest this blue line or even lower. So those are the levels where we had as late or as close to as November last year. So it's not something totally impossible. So that's why I'm a bit reserved about what this is now, because it can look like it's a selling climax, or it might just as well be part of the process where the price is still coming down and this is just an LPSY. So that's why be cautious what's coming, irrespective of whether that's an automatic rally or an LPSY. This downward movement is expected, and then obviously if it really comes down, even if there's a selling climax, there is still chance for the price to come down to show us some second tests or even more tests. So basically it will keep testing the market demand, or how fearful people are before the price stops to decline. This, what happened on Friday, was very tricky because it's not like a normal incident, so it's triggered by something big, but it may be the trigger of a longer period of decline. So that's what happened, like similar to over here. There was some downward movements and then eventually bounced up, but then ended up to a lower point. All these are kind of similar, so be cautious not to call this a selling climax too early. And then just to switch on this to check, previously there was a squeeze, but now the purple lines are deviating from the orange, so depending on how narrow the price is going to trade within this triangle, we may have a second squeeze probably in a few days time if they continue to get into this narrower range. So for now it's not an issue. As for these stages, first after distribution, let's align it with what I have put in the weekly time frame. So the upside is 30% chance. I would say if that's not the selling climax, then the 70% chance comes to somewhere around here. At least we kind of expect either a selling climax or a second test be at around this level, so similar to what we had just earlier this year, April and June. Okay, so that's pretty much it for Cardano. Thanks for joining. See you in the next session.